Good day. This is Gretcha Layola, just to explain or discuss the answers from questions 8 up to 14. So here's the 8th question. According to the standards of the profession, which of the following circumstances will prevent a CPA performing audit engagements from being independent? The choices are A. Obtaining a collateralized automobile loan from a financial institution client. B. Litigation with a client relating to billing for consulting services for which the amount is immaterial. C. Employment of the CPA's spouse as a client's director of internal audit. And D. Acting as an honorary trustee for a not-for-profit organization client. The answer here is letter C, because the CPA's independence is not applied or affected if there's an employment of a CPA's spouse as a client's director of internal audit. For number 9, when we say network firm, it is a firm or entity that belongs to a network, while firm is defined as a for-profit business usually formed as a partnership that provides professional services such as legal or accounting services. On the other hand, practice or accounting practice is the process and activity of recording the day-to-day financial operations of a business entity. The answer here is office. Office is defined as a distinct subgroup, whether organized on geographical or practice lines. Number 10 answer is letter A. Independence is potentially affected by self-interest threat, familiarity threat, self-review threat, intimidation threat, and advocacy threat. A self-interest threat exists if the auditor holds a direct or indirect financial interest in the company or depends on the client for a major fee that is outstanding. However, self-review threat exists if the auditor is auditing his own work or work that is done by others in the firm, while advocacy threat exists if the auditor is involved in promoting the client to the point where their objectivity is potentially compromised. Then, familiarity threat exists if the auditor is too personally close to or familiar with employees, officers, or directors of the client's company. Lastly, an intimidation threat exists if the auditor is intimidated by management or its directors to the point that they are deferred from acting objectively. Number 11, the answer is letter A. As I mentioned earlier, self-interest threat occurs when a firm or a member of the assurance team could benefit from a financial interest. Number 12, the profession's ethical standards most likely would be considered to have been violated when a CPA represents that specific consulting services will be performed for a stated fee and it is apparent at the time of the representation that the choices are: A. Actual fee would be substantially higher. B. Actual fee would be substantially lower than the fees charged by other CPAs for comparable services. C. CPA would not be independent. D. a fee was a competitive bid? Answer is letter D, because a fee was a competitive bid is considered as violation. Number 13, not all engagements are assurance engagements. Other engagements performed by practitioners that do not meet the definition of assurance engagements are classified as non-assurance engagements or services. Non-assurance engagements are those that do not result in the practitioner's expressions of a conclusion that provides a level of assurance, whether negative assurance or other form of assurance. The practitioners that do not convey to the intended users any assurance as to the reliability of assertion. The practitioner's primary purpose of performing non-assurance services is to provide advice and technical assistance that would enable a client to conduct its business more effectively. Examples of non-assurance engagements are agreed upon procedures engagements, compilations of other financial information engagements, and consulting engagements such as management and tax consulting. The answer for this item is D. Examination of prospective financial information, since it aims to issue an opinion on whether the prospective financial information was or not properly prepared on the basis of stated assumptions, including a negative assurance statement on which those assumptions provide or not a reasonable basis for the preparation of the prospective financial information. Number 14. According to the ethical standards of the profession, which of the following acts is generally prohibited? The choices are A. Issuing a modified report explaining a failure to follow a governmental regulatory agency standards when conducting an attest service for a client. B. Revealing confidential client information during a quality review of a professional practice by a team from the state CPA Society. C. Accepting a contingent fee for representing a client in an examination of the client federal tax return by an IRS agent. D. Retaining client records after an engagement is terminated prior to completion and the client has demanded their return. The answer here is D, because according to interpretation 501-1, if an engagement is terminated prior to completion, the member is required to return only client's record. That's all for my part. Thank you for watching.